Exchange. Hi, Stephen.
Morning.
Is this a big deal, the fact that he's meeting with the Chinese Vice Premier? Can we read into this as being a step forward between relations of the two countries?
Well, you know, I don't know if it's so much a step forward for the United States, because the politicians in the United States, the politicians in Washington are still blaming China for the problems that are really U.S.-grown problems. I mean, you know, the problem with the trade deficit in the United States is not because of the strong yuan, or rather the weak yuan. It's not because China is an export-dominated economy. It's because Americans spend more than they save. That's the real problem. So it's not a step ahead for the United States. What I would say to you is that Geithner's trip to Beijing is probably it's obviously to discuss the yuan, but the Chinese are going to move at their own pace. They're going to use a yuan revaluation in line with other measures to tackle some of the strong growth in the country and to rein in some of the, you know, obviously speculative pressures, asset prices, and obviously inflation. That's where the stronger currency.
When can we expect then some sort of gradual revaluation?
I think so. I still stick with my view that we're more likely to see something in the second half of the year, because I don't think that the power in Beijing will want to be seen as moving when the United States says it's ready to move. It's time to move. So we still favor the second half of the year for something, and then a further revaluation in 2011.
It was a plus, though, wasn't it, with regards to relations, that the U.S. didn't brand China a currency manipulator. For now, at least, it's postponed its decision. That's a positive, surely.
Well, maybe for U.S.-China relations, I don't know. I don't think anything can really be accomplished by the United States doing that. It's certainly not a good way to conduct positive relations with a country like China, who, you know, is very important for the United States for obvious reasons.
Okay, on to matters closer to home, Stephen. ECB, Bank of England. Let's stick with the Bank of England. Sterling down for a third day. We're all talking about this election, the possibilities of a hung parliament. Talk to me about sterling's fortunes in the next month.
We know we've always been very, very bearish on sterling, and actually from a longer-term perspective we are. We have concerns about 2011 because we think growth may not come close to the current expectations, which are very optimistic. The Treasury 3.5% for GDP growth next year, wildly optimistic. But we've revised up our call for sterling this year because we think the risk awareness at the Bank of England, at the Treasury, is high enough to prevent some sort of a major crisis in the pound. And I think most interesting for sterling is the minutes that we got out of the Bank of England earlier in March. There seem to be indications from the Bank of England that they're becoming more worried about the inflationary effects of the weaker pound rather than the rebalancing effects of the weaker pound, that is, you know, supporting exports and supporting and rebalancing the economy. So I think as we head through the year, the Bank of England is likely to become more attuned to the inflation risk.
So a rate hike this year, or is it too early?
I think it's possible we see a withdrawal, that emergency stimulus in the second half of the year. They have to exhibit some degree of control over sterling. They will do that on the fiscal side to a degree after the election, we think, and also the Bank of England will have to do something maybe in the second half of the year to just reinforce that control over sterling so the market doesn't get out of control.
How can they address it on a fiscal side if there's a hung parliament? Or do you think a hung parliament could still engender fiscal restraint?
Yes, that's our basic hypothesis, is that we think the risk awareness is so high that no matter what the outcome of the election, that AAA rating is too valuable for nothing to be done. Something will have to be done to appease the ratings agencies.
ECB, not very exciting, is it?
Holding pattern for the foreseeable future. Trichet's been very, very able to strike a balance between liquidity withdrawals and just generally easy policy for most of the meetings so far this year. We think he'll continue with that right through the summer. There's really no chance of any major move in that refinancing rate, the EONI rates, by the end of the year.
The dark cloud, though, that is Greece is still there, isn't it, Stephen? What does it take
that won't go away.
What does it take to lessen concerns about Greece?
I think what the markets ultimately want to see some kind of an easy financial backstop in place, and as long as there's uncertainty over that, there's going to be uncertainty related to the euro and to the whole EMU project.
But they said, you know, your government said we'll support Greece. You know, the IMF will be in place as well. Isn't that enough for the markets?
Well, I mean, now in terms of rumors we've heard this week, it seems that maybe Greece won't want to go for IMF support. That's actually a good thing for the EMU project because we don't want external support, but it's a bad thing for the markets. I think what the markets are showing us here, with what it's doing with the Greek bond market, what it's doing with the euro, is that they want to see some actual physical intervention, be it from the ECB or the EU. They'd love to see QE right now. QE would come in and support the euro, I think. So I think that's what the markets are trying to force. We're probably not going to get anything like that, though. It may actually get to the point where Greece defaults. It may actually get to that point sometime later this year.